Hello, everyone, and welcome to the Always On Point podcast with Kristen Ambos. Today, you are going to sit with yours truly, and for the next 15 or so minutes, we're going to discuss one of the hottest loan programs out there right now that is far underutilized and actually really not even that well known about, which is the DSCR program. DSCR stands for Debt Service Coverage Ratio. And all of you out there listening might be thinking, what in the heck is that? So this is a great loan program that is for investors. This is not a program that you can use to purchase a primary residence. But so many investors, so many people are looking to diversify their portfolios over the last couple of years. And so this loan program really came about with that. And one of the reasons why it came about is because so many people want to become investors, but don't necessarily qualify in the certain box that maybe Fannie or Freddie Mac on the residential side put it in, or, the property doesn't meet the parameters of a commercial side. And I'll go into that. For those of you who are still somewhat new to the channel, I have a few past episodes where we've talked to people that have invested, house hacked for individuals starting out and things to that nature. So this just seemed like a great time to bring DSCR into this because investing is huge. And like I said, the way that people are diversifying their overall portfolios. I think back after 2008 and 10, so many people were afraid of real estate because for the first time in, modern history that we can remember, values of homes actually went down and not up. There was a short window in there where they came down, given the market, given what was going on with the government and what they were doing to the housing industry and what they were allowing, us as lenders and loan officers to do with that. So a lot of people took advantage, wrongfully took advantage. And, we felt the consequences of that through 2008 and 10 with being underwater on our homes, having to foreclose at a really record pace. Things, that go on, and people that understand and remember that is now getting to a position where, really, especially our younger adults are going, okay, wait a minute. I see nothing but rise and rise and rise and rise in values on real estate. I want to get into that. And you have people, who are my age, middle-aged. I hate even saying that, but middle-aged, in my mid-40s, and retirement is creeping upon us. And so we're looking to do things to diversify our portfolio so that by the time I'm of retirement age, I maybe don't owe anything on my homes and they are my passive income. So with that being said, DSCR is just another way to do that. This loan really is, I jokingly say, but there's seriousness to it. If I'm doing a residential loan with Fannie or Freddie, or I can do a commercial loan within my LLC. The DSCR program is if those two got together and said, we're going to merge what we can do and we're going to make a third program. So it's got a lot of the benefits of the residential, but also the benefits of commercial put together. So to give you a quick just overview, if you were an investor with Fannie Mae and Freddie Mac, you would be required on a single family home to put 20% down, but on a 2 to 4 unit, 4 units being the max, 25% down. Now you could close this in your name. Why people love it is because it can be amortized over 30 years on a fixed rate. So as an investor, you want to know what your gains are every year, and you don't want huge fluctuations in that payment. Now, on the commercial side, you may only have to put 20% down, which is one of the factors people love about it. One of the things that investors don't love about it is it's typically a 5-year adjustable rate mortgage. And what I'm trying to say is that the payment then can fluctuate every 5 years because you're going to have to refinance. You're going to have a new rate. You're going to have a new rate. Whether those rates go up or down, you're going to be at the mercy of what the market's doing at that time. Now, one of the things people love about a commercial loan is because it can be done in an LLC, which then closing on that home takes the risk off of the individual. So I myself have a property company called Ambos Properties. When the homes are in Ambos Properties LLC, I do not take the risk on personally. My company does. So that's what investors really like. But again, over here, they get in the conventional side, they get the 30-year fixed rate. Now, on the commercial side, it's amortized over 20 years. Again, making that payment more, making your monthly income on that home harder to achieve. With DSCR, we can do a 30-year fixed rate. We can close in your LLC, taking your personal liability off of it. So you got 30-year fixed, you've got it in the LLC, and you just have to qualify based on the income of the home, not your personal income. So the income of the home, that's another reason why people like commercial, is because it's essentially based on what is the home going to bring as far as rents are concerned. So again, conventional versus commercial. They got married and had a baby, it would be DSCR. That's the easiest way I can explain it. So why people love the DSCR loan? Again, 30-year fixed, 20% down, regardless if it's a 1 to 10 unit property. So commercial go over 4 units, residential stuck at 4 units, DSCR will go to 10 units. So that's massive. So you can buy a property with 1 to 10 units and 20% down, amortized over 30 years. And as long as the overall rents are more than the payment of principal, interest, taxes, and insurance, that home would qualify. Couple things to take into consideration. The higher the credit score, the more the reserves. So the more assets you have in reserves, always going to bring you a lower interest rate. Those are things you want to know about when you're doing DSCR. The other thing that's good to understand is, on the Fannie and Freddie side, investment rates are up. They're up into that mid upper 7s at some point. Commercial loans are based off of prime. In a lot of cases, prime plus whatever the bank's charging. I can tell you right now, that's anywhere from maybe 7.5 to 8.5. DSCR right now, depending on the people, that are buying in their qualifications, is probably somewhere between 8 and 9%. So while the rate might be a little bit higher than your conventional and or your commercial, again, it's based on that 30-year fixed, as well as it's not taking any of your income into account for the qualification. That's always a risk, right? The lender to a risk. The more the rents cover the payment, the better the interest rate. So for example, if the payment on a property you're looking to buy is $1,000 and the rent you can take in is $1,000, that's a 1-to-1 ratio. That's going to be probably the highest rate offered. Now, if you go to $1,200 a month rent coming in and $1,000 payment, that's 1-to-2. If you go $1,500 a month rent coming in at $1,000 payment, even better, 1-to-5. So what this is saying is the more rent you have, the lower the interest rate's going to be. The assets or the rents overcoming that payment, the more proceeds you have, the lower the interest rate, because it's that much less of a risk that you're going to default on the payment. That's what it all comes down to, is the default risk. Lenders don't want default. As many of you might think that we're after that, that's the last thing we're after. We don't want default. We want all of our loans and our, the liability that we're putting in on taking that loan on. We want to see it perform. And the better performance it has, the more we're going to want to lend on it. So that's where we just go back to the more proceeds you make as an owner of that property, the less. Now, here's the other thing DSCR is great for. You can utilize it for short-term rentals. You can even utilize it if you're buying an investment property and the house is vacant. When it's vacant, we're going to make sure the appraiser comes in and gives us what the value of that monthly rent is comparatively speaking to other rentals in that market. So we're going to get rents from there. Third thing is, if there are new leases that we can come to in agreement and have signed before we close, all the better. We will then use those lease agreements as long as there's 12 months signed with 1 month security deposit. So a lot of leeway on the DSCR. We've got a lot of different options. What do clients love the most about it? Again, lower down payments for a lot of properties, especially going to 2 to 4 plus units. They love the fact that it's a 30-year amortization, gaining their monthly proceeds on that. And thirdly, the least amount of documentation you're ever going to do on a loan is going to be with DSCR. You're going to have a credit bureau pull. You're going to have the paperwork of the home itself proving its value, whether that be in lease agreements and or the appraisal, but you have no taxes to give, no pay stubs to give, no W-2s to give. So people who are newer entrepreneurs who maybe haven't been in business for 2+ years and can't qualify on the residential side can qualify with the DSCR, not having to do it on a commercial loan. The other thing is again, they can put it in their LLC, waiving that personal liability. So I know I might have repeated myself a few times in here, but it's so important to know what the differences are and that there is now a third option that has come to us over the last few years to help you diversify your portfolio. So my team and I have closed a bunch of these. We want to continue to spread the word as an investor myself and also as a lender who is versed in this loan product. They are great. They are well performing and they are really nice for investors to have another option on in order to maximize their profitability. So you have any questions at all, I would love to set up a call to go over this with you. Drop your comments below. We'll answer them there. You'll also have my information to get a hold of me so we can talk about if this program would be a right fit for you and diversifying your portfolio or starting to invest in real estate. You don't have to be a versed LLC person in order to get these. You can do them on your own without having an LLC as well. And just getting started in the real estate world. Maybe you don't have a ton of assets for a big down payment. This would be, or all the reserves to go after it. This would be a great way to do so. So give us a call. Let's chat more on that. Until then, I again really appreciate you sitting down with us. Like and subscribe. If you could download, share with anyone you know looking for it. That's the only cost of entry to the Always On Point podcast with Kristen Ambos. We are just doing our best to get as much education on real estate, the behind the scenes of real estate, as well as education in real estate on this channel. And would love for you to continue to listen in and share us. So thank you so much. Hope you have a great day and we'll see you on the next one.